Hello everyone, this is Alexander Nikolov. Let's take a look at these markets. The markets are down today, right now. Today is December 14th, 2011. And right now all markets are down. Let's take a look particularly on the foreign exchange markets in this video today. Euro declined sharply in the past 2-3 days, and as a result is now trading below 130 mark. And as you can see from the daily chart of euro dollar, the trend is strongly on the downside. The prices are well below the declining 21-day moving average, which means the shorter term time frame, the shorter term trend is down, and not only is down, but it's a strong downtrend. The next level of potential support on the daily chart is the Fibonacci level at 126.70. Going to the weekly chart, we can see that there is some potential support also at 128.70 level, which is also a Fibonacci level here. So this is also a level to watch, actually 128.70. So definitely the path of least resistance now is on the downside here. And of course, as you know, this is due to the concerns about the Eurozone and the debt situation in Europe. Longer term, I still don't expect to see a move below the last year's low at 118. So probably the euro will find some support in near the 126 level. It can decline even lower, but somewhere in this range here, 126, 127, 125, the euro will likely find support, and another sharp move higher will then commence. Let's go to the British pound. British pound is has been much stronger than euro due to the extremely good performance of the British pound versus the euro. Actually, let's take a look at the cross here. As you can see, the trend here is quite negative for the single currency. The trend is down, and on the daily chart it's even more stronger on the downside. It's stronger on the downside. So due to this strength of the British pound versus the euro, British pound has performed better against the US dollar. But still, as we know from the weekly chart, as you know, I'm looking here for a gigantic triangle from the early 2009 low. And if that's the case, we should see some further weakness here toward 150 at least before another rally can take place here toward let's say 157, 159 level. And going forward, to recap my longer term forecast here, I expect a move down to below 135. So overall, the forecast here is quite bearish at this point. Of course, the things can change, particularly if the prices manage to move above this year's tops, this year's highs near 167.5, 167.50. If the British pound moves above there, the picture will change from bearish to bullish. But right now, with the declining weekly 100-day and 200, not 100-day, but 100-week and 200-week moving averages, the trend is lower. So this broad sideways consolidation is believed to be a triangle, and actually a bearish triangle. So I expect a thrust lower sometime next year. And finally, from the currency markets, this is the US dollar versus the Japanese yen. This market has been quite boring for some time, but from the weekly chart, you can tell the trend is down. And the daily chart is more neutral than anything. The prices moved above the 100-day moving average, and the 100-day moving average has flattened out. So the trend here is sideways, which means the outlook is neutral. But still, with a declining 200-day moving average, I believe that rallies should be sought here, and most likely This pair is tracing out a bearish triangle here, over here, which will likely take a few more months to unfold, and then in late Q1 of 2012, the market will bring a new decline. We'll see a new decline to new lows here below 75 level. But overall, right now the outlook is bearish, and the worst thing is that this market is very boring right now because the daily moves are extremely tight. The ranges are extremely tight, so nothing serious here for the more positioned players. Only day traders can find some opportunities in this market. And let's take a look. I'm not going to take a look at the US stock indexes right now in this video, but let's take a look at two commodities markets that have broken down severely this week. This is the chart of silver. Silver has lagged gold for quite some time after the huge decline that we saw earlier this year, but right now it is moving sharply lower, and the picture is quite negative. It's a strong move down right now, and if this move down penetrates the the low that was achieved in early May this year, then the outlook will become extremely bearish here for the longer term. So not a good outlook for silver. And gold, if you take a look at gold, you can still make a bullish case here, because you can draw a trend line from 2008 low, and this trend line is still intact. So based on this trend line, one can now favor a long position. And actually this may be a good trade, because as you can see, the risk here is not big. You can place your stop below the this year's low, near actually this is the September's low. So longs can be favored here, but if a move lower is seen, if a decline below the September low is seen, then the outlook will become bearish here as well. So overall, gold is still an uptrend, but caution is advised, as a more serious trend reversal may be underway here in this market. So this is a very quick update for this week. This will do it. I hope you have very nice and safe holidays ahead, and I'll talk to you again either just before the New Year's holiday, or just after the New Year's holiday. So enjoy your holidays, and thanks for watching.